investing by traders is left. So maybe like 2 o'clock, we can start that again. 1 hour, 1 hour, 15-minute type topic, and then the final Q&A happens. So right now, this is Q&A related to everything done today. So please ask me relevant questions, and it's useful in a workshop situation that don't ask or expect stock calls. Focus on concepts. Concepts will help you. Stock calls are a matter of opinion. So please get clarification for something you may have missed out. That is much more important. See, again, on Bank Nifty, the question is which swing trading setup you recommend. It depends on the phase of the Bank Nifty. If it's sideways, fade the boundaries. Buy at yesterday's or previous period's low. What is a previous period for a swing trader? Previous week low. What is previous period for on the upside? Previous week high. If it is trending, buy at pivot. Same theory. If it's a narrow week, look for breakout. So the same trade management, same thing, same entries work. Just you need to look at the weekly pivots instead of the daily pivots. Mhm. Question is about slide 155. The monthly pivots are calculated by monthly open high low close. Weekly pivots by weekly open high low close. See, expiry day other than last 30 minutes, I don't think it's any way different from the rest. The only days it's different is where there is a strong trend since morning, and because of expiry that gets accentuated. Otherwise, till 3 o'clock, everything remains normal. See, it depends market order. If it's possible to do limit order, that's preferable. Sometimes it's not. At least on the exit, if you have some idea looking towards the, you can put orders, pre the price getting there. Please point out the slide that you are talking about panic buying, panic selling. See, if a news update is big enough, it will appear on the CNBC screen by itself. See, my take on trading is that I don't want to get biased. If I have to look at somebody else to tell me what to do, or if I have to run through all the news, then I get biased. I will look at news for my commentary, but for trading, I want to have as clear a head and locations that are useful to take action by getting all kinds of news moves and biases in, you will only end up screwing your trade. But we haven't gotten to this buying on melt up, etc. We are still here. Here? I don't think we have gone till there. I think we'll start when we start from this 177 zone. Okay. Last couple of days on Bank Nifty. Let's talk about that, and it's useful to look at recent data. That is why we have so much time. First of all, what is Bank Nifty doing? Okay. Now, what would you call this? I think it's a sideways market, and the boundaries are more or less defined. The boundaries are till about here, right? Now, this was the first day the boundary got defined, right? So the trade was on the second day because this opened again at the previous high and started coming off sharply. So this was your big day. This is that, I think, HDFC day. So it's not necessary you will get the trade immediately on the same day, but what we had was a point of reference that yesterday high holds and the market closes at the low of the day. Next day, all day we are sideways. Remember I said trending days lead to sideways days. The third day was again sideways day, but the lows of all these 3 days are the same. So somewhere we are getting the lower end of the boundary. Okay. Again, we broke out and started rallying and almost rallied to previous highs here, the higher end of the range. It fell a bit short, but we got almost there. And that is where trailing stops help, because a sideways market can sometimes misbehave. Now, on Friday, we gapped down. And again, we didn't get back to previous low. I'm only pointing out.
So pointing out this screen.
I can see the pointer.
Logo.
Okay, so on this day, we almost got to these highs. Fell a bit short, but almost got there. So we now have the low range and the high range. On Friday, we gapped down to about 26,250 thereabouts. And this gap down was bought because it's a sideways market. The gap down did not give you follow through. So as long as it's a sideways market, you tend to get a trade every other day. The day we open above 26,800 and hopefully cross even these two highs is about 26,950 thereabouts. A 150 point move, you will start to get a rally. So now this sideways action is getting ready for some kind of breakout. But till that breakout does not happen, you have to act as if it's a sideways market. Now what happens on the Nifty? Now Nifty is not as clear as Bank Nifty. Okay, this is a range. Looked like we were breaking out on Thursday, but Friday's action negated that. So Nifty is not as clear as Bank Nifty. So possibly it should not be traded because the pivot is still higher and it just seems the range is about shifted to the higher level. So the call on Monday is that the range is shifted higher and there is no great opportunity on the Nifty. I think I said very clearly, even wrote down that swing trading should be done with the weekly pivots or the 15-minute time frame. I don't believe screening websites is the way to go. Why? Because any computerized program you create will be too specific. If computers could trade markets better than humans, then investment banks would not need thousands of traders. My sense is you keep your universe 10 to 15 stocks and look for patterns with your eyes because often a legitimate pattern will get rejected and a bad pattern will get selected by a machine. One 21, 122. It is not the same pattern, it is different. See, futures premium discount matters when it's larger than 35, 40 points on Nifty, larger than 100 points on Bank Nifty. Otherwise, there isn't too much significance. The 10 to 15 stocks you need to choose are large price range stocks where there is some sort of tailwind on the upside or the downside. which means the more trending stocks you choose, the better your trading will be. See, mean reversion often happens in a sideways situation, and expansion happens from a narrow range. From a narrow range, you are more likely to see follow through than in a sideways market. See, options, I use them as a directional product. So if you have to buy futures, instead you buy the nearest option. I don't think anything more can be discussed. Writing options is more about hedging than about taking positions. Okay, writing option is what? You have your bank nifty pivots. You keep writing options at the pivot. So writing options, if it's a sideways market, write call options at higher levels, write put options at a S1. Exactly same, take a bullish or bearish position based on levels. See, bank nifty I often see. Along with that, I look at charts of ICICI Bank, HDFC Bank, State Bank, Kotak now. PSU banks don't have too much significance in the bank nifty other than SBI. इसमें एक तो चला जाए. See, by the time reason comes out, it can be too late. So I don't worry about reasons. Reasons can be false, they can be true. My advice is focus on the bars, and I think action first happens in the market, only then news is announced. I would use futures chart even to trade option, because option charts can get messy and they don't give you the full message. 20 period average has relevance for everything. Bank Nifty, often the indices are either range bound or they are trending. So the 20 period average, a setup can be used when 20 MA is flat And the moment you start holding one side, you know which side the market is breaking. So 20 MA, if it's inclined on any instrument, gives you the message that the price is going to trend in that direction. See, again, it depends. If you are talking about a large movement coming in, then buying out of money is also good. But if it's a smaller movement, then at the money is better because out of money needs large movement. See, next not have enough liquidity. Only Nifty next month can be traded. If your trade is right, you know any month works. If it's wrong, then nothing works. So I don't really care about these small things. Sir, I don't know what you mean more in detail because this is the only detail I have. As I've told you many times, I keep my life simple. I have a simple entry strategy, I have simple money management, I have simple trade management. If you are looking for some great complication and predictive ability, you are barking up the wrong tree. Not only in terms of the person that you are learning from, also what works. I have spent many years, trying to learn Elliott and Gann and this and that. But has that improved the odds? No, the odds remain the same. Till your system is a 65-70% system, it's all fine. After that, it is trade management. Even if you get in 50 points later on Bank Nifty, but if you are able to ride it for 400 points, you are much better off than the guy who precisely entered and got off 20 points later. Well, you see, sometimes there are big discounts on stocks for various reasons, dividend, this, that. My advice is don't bother with all that. If you find another stock which looks equally good where the difference is lower, you can do that. Because often why the difference is there is no reasonable explanation. So don't try to mess around where there could be a problem. But in general, if there is a large discount, that means they are short position, but not necessarily. See, super trend is used by assholes, for the lack of a better word. If super trend was so good, why have the inventors of super trend given it away for free? Super trend works when there is a strong trend. And believe me, if there is a strong trend, you don't need super trend. No, it's not necessary to pick up index stocks. You can pick up non-index stocks also, just that they should have good liquidity and the movement, the average daily movement should be enough for good trading. There's no written rule. In fact, non-index is better because the percentage moves can be 3-4%. It's difficult to get a index stock to move 3-4%. Sir, you need to Google for Head and Shoulders. This is not a Head and Shoulder workshop. See in the Excel spreadsheet, there is a yellow line that is called the contraction index. Now basically what that is if it is less than say zero point 0.9, zero point 0.8, you can say that it's a narrow range. Again, it's trying to put a speedometer, whereas the seasoned trader only needs to understand the chart or look at the chart to tell whether it's a narrow range. So anything below zero point 0.8 means that the index had a narrow range. The real significant part is when it gets to 0.5, 0.6. That is really narrow range. That means soon you will have a trending move. IT index is not tradable and you will lose money because you will lose 50 points on the upside and 50 on the downside. Unless you are trading like very basic 2 lot, 3 lot, I don't think IT index is worth trading. Yesterday post lunch was only examples. So examples you have to go through. इसमें चार्ट तो आया नहीं. Why is it untradable? क्या कर रहा है यार? Don't change this, no? इसमें I need a tab which takes me there. तो यहाँ को टैब तो आना चाहिए ना. हाँ.
And that's the
ये आ रहा है. Messy. This will be fixed. Here, you should not try to go short. Why? If it was negative, did you see the HDFC Bank day bar? It should have been a large bar. It is a relatively small bars. Anyway, if you can't make out, just relax. The trade was once the high of the day got crossed. Even if I am assuming for a minute that you went short. Okay. Now what? This is your stop. You started getting follow through. This is your stop. Once 50% of this started to get crossed by green, that should ring a bell. Okay, by the time this bar, big one, is crossed, your game is up. So even when if you went short here and the market came back on you, you are not losing much money. So don't worry about being right or wrong. You can always change position, and if you change position, 20 DMA holds on, 20 DMA holds on. By the end of the day, you will be up much more. This is 122. This is 123. How is it the same? Yes, 50 points is enough for intraday trading. If you are doing 7,000 shares, 50-point trade is good enough. I am not here to prove that I'll take 200 points. And often 200 points is not the movement. A. B. What that shows is the average buy and sell. If you are seeing 50 points, I could be long on 100, cut that position, then taken 200 on the short side. So on a net basis, the average will show you obviously less. Don't worry about number of points, worry about the amount of money. Volume is in my hand, price is not in my hands. There is no minimum number of points. A, as long as you are positive, all profit is welcome, and you are not doing P&L trading, which means that you keep looking at your trading statement to see whether you should carry or cut. As long as your trailing stop is not hit, as long as your system tells you stay in, stay in. Profit and loss traders never make big money. If you don't make big money, then you will never get the economics right. See, the point is that anything that is visual, if you add averages to pivot, you get a better visual sense. But whether odds improve significantly, I don't think that is the case. The clarity improves significantly. See, expectation depends on your experience and your competence. If there are 73 people here, people can make from minus 30 to plus 30 using the same techniques. So like we concluded yesterday, psychology is the most important issue. People with good psychology will have significantly better results. Do not assume that just because you are sitting here and you are learning how to trade, your results will be good. Your results will be good after a significant amount of time and persistence and learning and everything else developed by you. I follow basic pivots, but there are people who follow other styles of pivots also. I follow basic because it kind of coincides with the other methodology which I use, which is the moving average methodology. That is where mental work is needed. Just because Virat Kohli got out at 0 in the first innings, so in second innings he loses focus, that does not speak too highly of his mental strength. So improve your mental strength. Don't lose focus. What is the problem of 95%? That they lose focus in setbacks. If a player loses one set and then loses focus and loses the match, then he needs to work on himself. Do meditation. Go to, Sadhguru. Do Silva method. Do yoga. See, I don't change from MIS to carry because I am going to cut 320, 325 under all circumstances, whether it works or does not work. Because I like to take a fresh view daily, particularly in today's kind of market. But that's again personal choice. You cannot enter on a 5-minute setup for a 10-day move. Okay. If you entered on a swing trading basis, only then can you make the trade into a swing trade. Don't confuse the issue. I know a lot of people will not cut intraday trades. Finally, what will happen is you will start carrying your losing trades also overnight. So your intraday profit was 70 points. Your loss over 2 days will be 500. See, I'll give you a small example. Recently, I had put a tweet out that certain Ayurvedic medicine worked for me. And all kinds of people, they told me, no, allopathic is better. You have to adjust medicine, this, that. And this will happen, that will happen. My small example is that it worked for me. Have I said it will work for everybody? No. So finally, over time, you will have to develop your own style. And, some things you will take from me, some things you will take from somebody else, and slowly one floor at a time, your house will be built. So there is no right or wrong way. Some things work for me, some things don't work for me. It's a personality issue. See, moving averages and pivots are trend following instruments. Okay, so trend following instruments work in trending markets. So if the market is trending, you will have better results with a trend following instrument. But in a sideways market also, you will have something to do. I do not believe that you need more indicators make you more successful. So the information that I have given to you is more than enough. You master it, you will be, one of the finest traders. Because from the beginning I have said, you don't need to predict. Don't use this RSI, stochastic, etc. because the input everywhere is price. Say for example, I want to see oversold. If something has gone down for 7 days, I don't need RSI to tell me it's oversold. If the daylight between 20 DMA and the price and the 20 DMA and 200 is large, I know things are overstretched. Sir, when you apply something, Bank Nifty trading will be clear. Right now your knowledge is superficial. What has been told to you, apply it, and then you will know how things work. Now there is no 2+2 formula that I can give you. I have given you a methodology. Start small, apply it every day with persistence without looking here and there and adding 5 indicators, and finally you will get it. Experience is the teacher here. I don't know what is clear. You have to be said. At 10:05 you are here. If you've gone short here and this is where you are covering, at least get to S1 before covering. See, if you want to become chiller trader, then you will not end up making any money. If you are going short here, nearest support is here. At least you have to get close to this point. Because, see, there will be losers also. So when money is available, you will have to take it. This is the first point, you should be taking it off. And then see what happens. Because sometimes you take everything off here and market goes down. So always leave something in. Unless there is a good reason to not do anything. What is that good reason? That suddenly you have a large bar and after that there is a small shallow correction and starts to take this out. As long as we are hanging around here, it's fine. So that is all up to you. Want to use Zerodha leverage or you want to use your money? That is between you and Zerodha. Well, updated, I don't know what that means. Basically because I don't want to be too clued into news. Because how I perceive news is not important. How the market perceives news, that is more important. So even in the morning, whatever news is announced, I take it with a pinch of salt and I keep it on the side. What I want to see is how is the market reacting to news. So that way I try to keep my mind decluttered. By over-analyzing, by studying 6 hours a day, 10 hours a day, it will not improve your trading. It may improve commentary and it may make you look like Jnani, but that is about it. Once I am off, I am interested to look for the preconditions setups on various stocks and make my 10-12 stock list, maybe add a few things, take out a few things. That is what I want to do. I mean, some people think that, market people are always thinking about market. That's not true. You need 2 hours for good market preparation every day and that works. If you do any more, it is, too much, getting too much information. I can take once, 2, 4 times, sometimes none. There is no, method. If the market is strongly trending, there is, great amount of news flow which is going. I mean, you can trade many times. If the market is sideways, quite limp, you may not trade even once. Sir, you have to go through each chart and look at what happened during the day. There is no simple system of doing this. Once you pick up speed, 200 charts you can look at in 1 hour, because either the chart has something or does not have something. So you can reject charts within 3 seconds. I do not read any technical analysis books because I have seen many unsuccessful technical analysts in my life. Successful technical analysts who are unsuccessful traders. Analysis is rubbish. Analysis is a sophisticated word for what do you think? And thinking is the whole problem. We can't think. So let the market do thinking for us and we just chase it. Mark Douglas books are there. The Disciplined Traders. You just Google his name. He has about 2 or 3 books. Brett Steinberger is there. I think Randy Howell has probably 1 or 2 books. So, there's no dearth of people trying to explain to you how to trade. The problem is to find people who can trade well. See, how do you ride a cycle or learn to ride a cycle? First, you do things slowly. Then, as you become more confident, you increase your speed. Then you go to a larger road where there is traffic. Start everything slowly. Observation. The key to speculation is observation. Observe for a few days how what I have told works. Jumping in tomorrow itself with all kinds of big volume and getting hammered for 5 days does not work. So there are a million books, and I am not sure if reading all of them will make you any wiser. If you have a good entry system, if you have a good trade management, if you have a good money management, just do that unless it has some problem. But going on reading books will only confuse you a lot. Good technical analyst books are John Murphy, Intermarket Technical Analysis. Then you have Super Trader by Vanthar. Okay. Jesse Livermore, Trade Like Jesse Livermore is a book. But each person has its own strategy. My sense is you cannot copy word for word anybody's strategy. You listen to everybody, take things that are sounding good to you, leave some others, as I have done. जो बुक्स के नाम मैंने बोले टाइप कर दूं. See, the end of this game is not analysis. Analysis has zero value. The end of this game is to create money out of nothing. So never lose track of that. A lot of people get sidetracked to prove they know, to prove they can predict. That's all rubbish that does not sustain, that does not pay. What pays is to be able to make money consistently. Okay, that is where thinking is so important. You don't need to be a genius, a rocket scientist to be able to make money. My belief in writing all the books and this workshop and everything else is to make it so simple that even a 14-year-old can understand, and that is the level of knowledge you need to trade profitably. Most people cannot trade profitably because they are too old to leave their education behind. And as we know, education never took anybody anywhere. Anything complicated should be outright rejected because it will lead to much more problem than benefit you. Technical analysis by John Murphy और एक वो है Disciplined Trader by Mark Douglas. Trading plan should not be made stockwise. Trading plan is the general plan which should detail from the first topic onwards about your psychology, about your money management policy, about your entry strategy, your adding plan, your stop loss, everything. See, the more you learn to write about what you are doing, what you plan to do, the more you internalize. Journaling, etc., is very important. Like in a tennis match, want to know how many unforced errors you made, how many of your first serves were correct. So that way, this is a game where if you keep working on parameters, things will gradually improve. See, there can be no excel on trade management. Why? Because trade management, there are no set rules. If a particular stock is following 8 period moving average, then that is a trade management for that stock. If something is following 20, then that is a trade management. Often it is, the higher pivots, the higher lows become your stop losses. See, a lot of times some people who are new, they try to, make very tight rules. The problem with making rules is that when market does something else, you become a deer in the headlights. So keep things flexible also. Have your basic, idea and plan, but don't be too stuck up using only one thing for, like somebody says, I'll only use 20 as your trading stock. But if the stock is in a strong trend and it does not come back to 20, then what is the use of using 20? So at that time you should have the sense that okay, 20 is not getting tested, let me move to 8. Basically, whatever is said on the trading plan, what did you see to buy? Where did you put your initial stop? What happened after that? How did you update your stop? When did you add? And if you keep doing it every day, you are able to review at the end of the week. Okay, let me open my chart. Let me open my journal. Let me see what I did. Okay, on 5 days I am making the same mistake 3 times. Next week I will try not to make the same mistake. I mean, you will have to, improve one area at a time. If you think suddenly in 2 days you will become a fine trader, that's unlikely. Current chart of what? See, on this particular day, Look at this. This is a spike up. So your precondition is in place. Next day morning, you get a big gap, or rather a big bar. Somewhere here you decide 150, 170 points lower, and this is getting rejected. You take short positions with a stop above the bar. Okay. Then we start getting all of this. So we drop our stop to the pivot. Okay. What is your first target? At least S1. So it goes to S1. Your stop drops here. You cover a bit here. Again rallies. Fails to get to pivot. See, in the market, you don't only need to look at what a stock is doing, but also what a stock is not doing. Like it is not able to get back to the pivot. This means the stock is weak enough. And again, it does up and down, up and down. No problem. You are sitting with your position. And then this is policy day. So 2:30 it starts to break down. Often if there is a news flow type day, I like to get out at S1 and just relax. But had it not been a policy day, then rest of the position could have been taken off here. See, broadly you want to do 1 is to 2, but it can't be that I decide that this is a 1 is to 2 trade or this is a 1 is to 4 trade, because I don't know what the market will do. If I see there's some problem, I am equally happy in 1 is to 1 or 1 is to 1.5. Basically, if you haven't lost money, you have won. See, RBI policy is a bit more risky. So, expected news, if it happens early in the morning and it gaps down and it recovers like the Gujarat news day, Gujarat election, I think 1st of January or something, or Donald Trump, where the market gapped down and reversed and started going up. So those are a bit easier. RBI policy, because it comes in the middle of the day, that is a bit more problematic, and because it comes at 2:30, so there is only 1 hour. So I am happier trading news at the beginning of the day. See, from 1st of July, what we'll be doing is that you will be in a similar kind of room, online digital room, and basically we'll try to see what we are able to do in the market on a real time basis. Right now, all the bars are stationary. It's very easy to say this will happen, that will happen. That is real time trading for a lot of you, and how my thought process is and how I use it. So that is basically 1 month. The idea of that is to demonstrate what we do daily out here. So that's about it. Sir, you are the person who is losing. Other people who are lifetime members are generally making money. Please call up the office and find out what you are doing wrong. Often people think that the onus of making money is if you just follow the calls, you'll make money. There are other things to do also. See, Monday trade setup, I would expect you people to find out. But overall, in my view, there is nothing to do on the index, at least as of now. We are in a very tight range. There is no follow through. So often in this sort of market, things don't work out on the index because the movement is very slow. If you have to buy into a large bar and that bar is 80% of the day's range, it becomes very difficult to trade on such days. So I would think, latch on to a sector that is moving, or use your 10-12 stock list, and wherever you are able to see these setups, you should be trading that. But like last year was a large range day on the index, this year is a sideways day. So based on that, the monthly, the weekly, everything becomes sideways. Everywhere the range is narrowing. So this year is a more difficult year to make money than last year. Last year moves were larger, momentum was strong. So this year, I think on all time frames, the movement is getting more and more limited. So this sense you need to have that what sort of phase you are in. I don't think doubling down, etc., is an intelligent strategy. If the market is telling you you are wrong, then that's the end of it. But doubling down on a losing position, which is very different from cutting and reversing. Say you are long and you expect S1 to hold on, that mean reversion trade. But what you figure out is suddenly S1 gets broken and the market starts running on the downside. So in that case, you will cut and reverse. And this will happen sometimes for no reason. This is called false breakout or false breakdown, where initial market told you that it's doing something else, but 10 minutes later it turned around. And at that time, we should not get into this thing of, I thought this, but now I have to change. I have lost face, and hence I am a bad person. My wife does not love me anymore. Don't create a mental mess. This is a market, it's like a video game. Video game, 60% of the time, 40% you fail. When you fail, you take it and move on and try to do better next time. That is the point of moving on. Everything is probabilities. Those probabilities are enhanced by preconditions. Those probabilities are enhanced by locations. But does it become foolproof? Does it become 100%? Nothing becomes 100%. And a lot of maneuvering is needed in trading, which means that sometimes you have to maneuver position. Say you bought something near 200 and it went lower and again turned from that zone. So in that case, you can sometimes even add. Why? Because as long as the 200 holds on, you are still in buy on dips. But that you should do with experience. Initially, I won't like you to add more than one or two lots, because the bigger position, if you are wrong, will get a bigger problem. Okay. Start slow, develop your skills, learn, understand. If you are here that, next month I'll buy a house with trading, then sir, good luck. Nothing in life of significance comes easy. It is a journey in which you will see blood, gore, sweat, and at the end of it, you will be consistent. Okay. And this knowledge is superficial right now. How will it get internalized? Why have most of us not become great scientists after becoming engineers? Because we got a superficial knowledge. We could not apply that knowledge. Okay. So what I am giving you is 10% of the story. 90% will be given by your experience. Because if there was a set rule, if there was everything written down in a book, then what was the problem? But you will learn the odds of things working, not working, etc. with time. An average of 1 year should be taken as a time frame in which you will become consistent, in which you will start winning more times and more quantity than when you are losing. So take it easy, give it the respect it demands. Don't try to play outside your limit before you become confident. Don't lose all your capital, because if you lose your capital, you lose your confidence. So first thing the Nifty chart is saying is that it's not in any kind of strong trend. Yes, you have been able to figure out the range of last 2 days, but who knows whether that range will continue or will move down 200 points. So the whole idea is, if it's range bound, the ranges have to be consistent over 5-6 sessions. Similarly, if it's trading, it should demonstrate some kind of strong trend. That is not available. See, if you are forcing yourself on the market will not give you anything. I think we are kind of biding time. I don't think we will get to new highs very easily. While we are making higher lows, it's still kind of very consolidating. What is the leadership? I can't see any leadership. Basically, on a short day, you buy and next day it goes up. On a long day, at highs you sell, it comes down. It's that sort of market. So my mood is more sideways than any sort of big trending mood. Sir, actually, since yesterday I am doing this workshop, so I have not made a list so far. But stocks which you should look at are stocks at new highs and ones at new lows, so that you have ideas on both sides. That is my recommendation and advice. Stock list, etc. for live trading will be available from July 1. Okay. See, try out stuff with one share. That will give you much bigger confidence than anything that I can tell you. Okay. Focus on one setup at a time. Master one setup in 2 weeks. Then move to something else. If you try to do everything together and make a big khichdi, I don't think that will benefit you. So just relax. Now you know what to do. The only thing you got to do is do it. If you get in too large, you have a problem, and you leave this methodology in 2 weeks, then you're the only loser. I know people who take a methodology, do 2 weeks, conclude it doesn't work, again move on. again move on. They have spent 20 years moving from method. So all methods have a good time, all methods have a bad time. So I think sticking to something is more important than being in a hurry, get results. Do one share first week. If you can make money, do two, four, eight. In 12 weeks, you'll be at 500, 1000 shares. Okay. So that is the limited advice I want to give you. It's 1 o'clock, 1:05. Let's do lunch till 1:45, and then from 1:45 we'll do investing by traders, in which I'll show you how I add chart and some very basic fundamentals, and sometimes run into large multi-baggers. So that's something useful to have, because whenever, as you can see these days, mid caps have been hammered out of shape. It can be sometimes useful to use these opportunities for long-term investment also. And traders can invest long-term, since you have trade management on all time frames. It's possible to make a decent portfolio. So that we'll do at 1:45, and that will be the final technical section. After that, we can again do one round of Q&A, and where we can look at some charts, answer some questions leading to principle. So let's see if we can finish up by 4 o'clock again, so that you have some time and I have some time to look for setups tomorrow. Okay, let's meet after lunch.